Retail investors have been fueling the rise in a couple of high-profile stocks lately. Tesla shares up about 120% just so far this year. And remember, it's still February. Then take a look at Virgin Galactic, soaring more than 200%. Joining us right now to talk about what could be driving retail investors to take on this risk is J.J. Kinahan. He is chief market strategist at TD Ameritrade. And, J.J., it's great to see you this morning.
Always a pleasure.
So what do you think? What's happening here?
Well, a couple of things. Why don't we start with Virgin, because that's been the one that's really been in the news more primarily here the last couple of weeks. And with that one in particular, our clients have been buyers of it. There's no doubt about it, both our millennial clients and our more traditional clients, if you will.
What's traditional clients? I mean, older clients?
Yeah, older clients, yes. And so with that, I think there's two things about it. Number one, a little bit of it could be the Richard Branson effect, not quite the Elon Musk effect, but he's an interesting guy, been very successful before this, so people are attracted to that. Number two, there's really no other way to play the space game, so to speak. You know, SpaceX is out there and has a valuation right now somewhere above $30 billion. As of last night, Virgin Galactic is just over $7 billion. So I think people see a little bit of a disparity there and are perhaps hoping that, one catches the other, if you will.
I like what you just said about this being the only way to play space, because I think that's kind of what might be happening with Tesla, too. Mike Santoli has posited this, that all the excitement about electric vehicles gets kind of funneled through Tesla shares right now, too. If you're looking to buy into any of those trends, that's where you go.
Absolutely, and as long as we're speaking about Tesla, that one has been, if we go back 6 months, it's been a favorite of our particularly millennial clients for the last 6 months of last year. Now it's become a little bit of a different game that the price has gotten so high. In that, it seems as though our clients, both our millennial clients and, again, our traditional clients, are playing it more really based on price, Becky. So if that stock gets between 700 and 750, our clients turn to buyers. The stock goes above 850, our clients have turned to sellers. That stock gets above 900, they really turn to sellers. So looking at yesterday's action, our clients were heavy sellers of that stock from the longs they already had. So it's really interesting how that one has been a function of price. The other thing is in the option space, our clients have really played Tesla heavily also, and I think that's also, if you will, a function of price. Because it's such a high-priced stock, people who want to be involved are going to the options market because in pure dollars, it's just less dollars up front in order to play Tesla. So that's been an interesting phenomenon.
What do you think of both millennial and, as you call them, your more traditional clients, your older clients? What about their risk threshold in terms of what they see right now? You watch a stock like that run. Are they more in the FOMO camp where they're afraid to miss out? Or are they more where there's a point where they start to say, OK, this has run too hot, too fast for me?
Well, I think two things. I was at an event with our clients this week in Phoenix. And so the one thing is I don't think there's as much FOMO, if you will, as there was with Tesla when it was below 500. I think then because, again, on pure price, people were like, OK, I want to be involved. And I think that might also explain a little bit of SpaceX to Virgin, to your point, because that's still a pretty affordable stock in terms of just dollars. So with Tesla, it's become, as I said, a matter of the price being that high.